There's a lot of misconceptions when it comes to buying a house, and today Kim Swann and I are going to address some of the most common mortgage myths that we come across. I'm Amy Shrader with RE/MAX Real Estate 10.
And I'm Kim Swann with Mortgage Investors Group.
So today we're going to dive into debunking some popular mortgage myths, so to speak. So the first one is getting pre-qualified is the same as being pre-approved. True or false?
It is definitely false.
All right. What's the difference?
The difference is basically pre-qualified is kind of what information you provide. In other words, if I took someone's application over the phone and they said, hey, I make $12 an hour and I work 40 hours a week and I've got $15,000 in the bank, we take that information and we pre-qualify them based on that information. A pre-approval is when we actually have that documentation, because sometimes people's income may not be the same as what they tell us. Their employer may not be the same, and how they're paid is the same, and what they have in the bank's not the same. So that's the difference between those two terms, basically.
Okay. So pre-qualified means you're just qualifying them based on pulling their credit and going off what they've said. Pre-approval means they've actually supplied you the supporting documentation and you have gotten that approved.
Yes.
Okay.
Yes.
All right. So being pre-approved is obviously the best choice.
Yes.
Especially in a market like we're in right now where, houses do go quickly. So getting pre-approved is worth the time and effort, because then the only thing that has to be done is getting the appraisal and the title work done, and you can move on to closing.
Right.
All right. Shopping lenders will hurt my credit score.
That would also be false. Basically, if you are, because a lot of people will shop rates. So if you just have a couple of different lenders pulling your credit to, check what their rates are and programs they have available, that's not going to affect your credit scores. What really hurts people's credit scores is where, maybe if you're car shopping, I've had people come in here and they've car shopped and they've had 20 inquiries on their credit report. Or they've, I used to say like going to a mall, which malls are kind of a thing of the past anymore, but, or if they go out and take a day of shopping and every department store they go into, they apply for a credit card. Those are things that can affect their credit and hurt their credit scores. Mainly when you're shopping for a mortgage, you're only going to get that one mortgage. So a couple of inquiries for that's not going to affect their credit scores.
Now, I believe, isn't it true that you have like a 10-day window that all the mortgage companies that pull it just looks at it as one?
Yeah, I've heard that as well. That there's a certain time frame that you do just have that a mortgage hit will only show up as just one inquiry for mortgage inquiries. So,
and normally you're not going to take more than 10 days to shop for the mortgage.
Right. Right. Definitely. Yeah. Yeah. If you're looking to get a mortgage and you're going to shop those, you want to do that in a certain time frame to know where you're going to land for that. So. Okay.
I need perfect credit to buy a house.
Oh, that's also false. All these are going to be false today, it sounds like. So, I guess if you talk about perfect credit and a perfect credit score, I guess anything that's going to be a 740 or greater. And we've got FHA products, so we can go down to a 580 credit score. So we can do, we've got an FHA, we can do 2 years out of bankruptcy, rural development, we'll do 3 years out of bankruptcy. So there's a lot of options there. No, we don't see a lot of perfect credit. It's hard. Something's hard to do is keep perfect credit, So.
Yeah. And even if you pay all your bills on time, what gets a lot of people is medical bills.
Oh, yes.
Even with insurance, sometimes you accumulate those. If you have, somebody breaks an arm or a leg, or they have to have surgery, and those bills pile up, and they're real quick to put collections on your credit report just to let you know that you owe them money. So
insurance doesn't work as good as it used to. You could have insurance and it would pay, most all your bills, and now it doesn't seem to be the case. Another thing that can affect people's credit scores that they don't think about is using credit cards. If you have $1,000, limit on a credit card, and let's say you take a vacation and you charge $900 on that $1,000 limit, then that can actually drop people's credit scores because they've maxed out that account. So they can have no late payments, but still have that happen and, and affect their credit scores. So.
All right. You can't have debt and buy a house.
If anybody doesn't have debt, raise your hand. So
exactly.
Obviously, there's room there. One thing we do look at is your debt to income ratio, but obviously you can have other debts. Now obviously those $1,300 to $1,400 car payments can affect how much of a house you can buy, but obviously other debts is not a problem at all, because we have a housing ratio that we look at, and basically that's how much of your income you're using for your house payment. And then we have a total debt ratio, and that's where we look at your other debts that you have, which can be any credit card payments, student loan payments, car payments, if you pay child support or alimony, and that goes in another set of ratio number that we look at. So you can definitely have debts and buy a house. So,
all right, I need 20% down payment in order to buy a house.
Again, false, and that's almost like I don't have any debt. Not many people. It's something that's hard to do to save, because obviously if you're paying rent, it's hard to save that 20% while you're paying rent versus going ahead and purchasing a home. We've actually got 3 different products that are no down payment. And of course, there's some closing costs, but if the seller agrees to pay those, then you can get into those with no money out of pocket. Then we've got an FHA, and the down payment on it is 3.5% of the sales price. So a lot of options are there, and I'll be honest, probably of 10, maybe 10 borrowers, maybe 1 or 2 might have 20%. Most people just don't this day and time. It's just hard to come up with that amount of money.
Usually it's people who are downsizing, who are going to have that down payment money,
right.
A little bit older,
right.
And established to have the down payment. So,
and a lot of that is coming, like you said, downsizing, where they have a house already and they're selling it and they've built equity. So it's another reason to, go ahead and buy now. That home that you buy now doesn't have to be your forever home, but it will allow you to build equity to purchase the next home that you want to buy too. So.
All right. There are no upfront costs in buying a home.
It's going to be a few things. Not a lot, but there will be a few things. One thing that's going to be required that you can go into detail too more about is what we call earnest money, and I'll let you explain that to them. 2 inspections that's I guess technically 3 inspections that we talk about that you would probably want to do up front is number 1 is a home inspection. And a termite inspections, checking the property for termites, and I'll let you kind of talk to them about that. Those are optional from a lending standpoint, and then of course from a lending standpoint is an appraisal has to be done. The appraisal fee is normally around $450 for that, and I'll let you tell them about the home inspection and termite inspection fees. So,
all right. Well, the first thing she mentioned was earnest money, and earnest money is just a good faith deposit that you put down when you're buying a house. It's kept in the escrow account of the real estate company. We don't make money off of that. It's a non-interest bearing account, and it's just held in our escrow until you go to closing. And then any money that you would need to bring to closing, that's applied back towards that. So if you do one of these, 100% mortgages and the sellers agreed to pay your closing cost, there's a very good chance you're going to get that earnest money back at closing. First time home buyers, a lot of times, your earnest money is going to be $250 to $500. You're not having to pay $1,000 or anything like that. And then the home inspection is going to depend on the size of the house, but it's normally going to run you about $400 to $450. If you use a company that can do all in one, then that would include the pest inspection fee as well. So the home inspection is not something that you're going to be able to get reimbursed by the seller. That is a buyer expense that you're required to pay. And, because the report's for your benefit so that you can see any, malfunctions with the home before you purchase it. So that would be the only out-of-pocket cost. And again, I've said this before, if you're buying a $175,000 house and at the closing, the only money out of pocket that you've had was $450 for a home inspection, then you've done pretty well as far as that goes.
And I think, like we tell people, home inspections for the lending standpoint are not required. But again, $450 to invest $175,000, in my book, it's something you would want to do,
Oh, yeah. I mean, I encourage all my buyers, unless it's somebody who has bought and sold several homes, if they're a contractor, they've worked construction, something to where they have kind of a background and they can look at those things when we're looking at the house. Every buyer needs to get a home inspection because there's a lot of things that sometimes the visible eye is not going to see just through, walking through the home. That home inspector is going to check electrical outlets. They're going to check the plumbing. They're going to check the heat and air unit, the appliances. They're going to make sure that everything works. There's going to be a lot of things on the report that, you know, you're going to kind of roll your eyes and be like, well, okay, yeah, I'm okay with the fact there's crack, you know, on the sidewalk. But, and I don't know why I always use that. That just cracks me up that they put there's a crack in the sidewalk, because most sidewalks are going to have cracks in them. But a home inspection is always a good investment.
Yeah, oh yeah, I would agree. And in my mind, you know, of course, the appraisal is the main objective of an appraisal, is to determine if the value's there. Now, appraiser will, if he sees something obvious, you know, on a property that needs to be repaired or inspected, you know, he'll make a note of that. But their main objective is just to determine the value. But I've always said that to homeowners as well, I think a home inspection's more valuable to you than that appraisal is. You know, I think
right.
You'll get more information there. You know.
Yeah, and a good realtor, when they're walking through the house, they're going to point out things that, you know, they see right off the bat. If the ceilings are discolored, then we're going to say something about, you know, the water damage. If you're going downstairs and there's no handrail, we're going to make mention of the fact that you're going to need to get a handrail, especially if you're doing a government loan. So that's why you want to work with a realtor, because we do have the experience, and we have done this numerous times, whereas it may be your first or second experience buying a house. We do this every day, and so we can really help point out things that you may not think about when you're first looking at the house. So, all right, so we have debunked all these mortgage myths for today. We will be back. Well, I will be back with you next Wednesday at noon. Kim has another appointment, but I'll be back with you next Wednesday, and we will be talking tips to get your home sold during the holidays. So be sure you stay tuned for that. Again, I'm Amy Shrader with RE/MAX Real Estate 10.
I'm Kim Swann with Mortgage Investors Group.
Thank you.
Thank you.